Yeah, I guess we could start with Nike low and ask you whether or not you think there's something unique about their footprint that allowed them to do what they did.
Well, first, thanks for having me. I don't have my Grinch costume, so I can't follow up to John's comment. But I do think that we need to always slice out the consumer segment in particular. And when thinking about Nike, it does target a slightly more premium consumer. And as we've seen for the past 12 months, even with the turbulence in the market, the premium consumers do seem to be a little more resilient to the downturns. So I'm not surprised about Nike. I think there's other trends as well. The fact that people are getting back out and sticking to staying out now, that's a benefit for Nike. The general trend on health benefit to Nike. Gyms are back open again. So, I'm not really too surprised to see some positive news coming out of Nike, given some of the other news that we've heard recently.
Yeah. North America up 31. I mean, that beats the street consensus by 9 points. And I have to imagine that in terms of cycles, you'd want to be in a period where you got growth returning, or at least some sort of resilient consumer base and the inventory to match it, right?
Yeah, no question. I think there's a few things that Nike has done to benefit and well position them. The expansion of the body types and sizing. So going after a broader consumer, not just people that are truly have an athletic type body. I think the trend fashion wise towards, streetwear and the popularity of a lot of the sneakers. You've seen a little bit of that slow down with some folks like StockX, but nonetheless, these trends seem to be here to stay. The casual movement towards how people dress to return back to the office. One of the perks is, hey, well, I don't have to go back and wear the clothes that I wore. So I think all these trends together really help to position Nike. But again, I can't emphasize enough the fact that Nike does target a slightly more premium customer as well.
Okay, Lo, let's take a step back and look at broader tech stocks in this context, talking about consumer demand, the overall economy, and enterprise-grade software as a tool to help customers, businesses capture what they can. If M&A turns out to be a key growth ingredient in 2023, who's best positioned to buy out there, the tools that companies are going to need to serve consumers, and under what conditions should they buy? It was kind of looking through companies like Cisco, which is rumored to be kind of stalking HashiCorp. Oracle seemed to be digesting Cerner pretty well. Maybe during 23 they'll be ready to go out again. Even IBM. Are those companies, you think, in a position to do M&A to fuel growth in 23 with some of these valuations coming down, even among public companies sub 10 billion?
Well, the greatest thing when someone is a deal maker is having a lot of money and everything being on sale. The behavior of consumers is no different in many instances for the behavior of corporate buyers, strategics, or even the private equity folks, financial buyers. And I think right now on the strategic side, the folks that are best positioned, I think we should look to who has actually made acquisitions, especially in the back half of this year. Many people would likely point to the fact that these corporates have bigger issues on their plates. But, I think there's a little bit of separation within the walls of a corporate, especially those that are positioned and currently doing well. If they have a large cash base, cash on their balance sheet, there is the ability to focus in on the macro headwinds, focus on top line growth or maintaining top line, and then focusing on cutting expenses to be able to manage to the bottom line. And I think also, there's an entirely different group, the corporate acquisition group, the corporate development group, and those folks typically have their eye towards strategic acquisitions that are going to fill a product gap or be able to add to an existing product offering. Yeah. And I think eye is towards the price. That's the key right now in this market is price.
So
Sellers
what's it
don't have realistic expectations right now.